Rachael. I'm here with the Australian Computer Society as a blockchain representative member. I'm also Digital Economy Council of Australia. I'm the chair of the Young Professionals, and I also volunteer with All Things Blockchain Queensland Meetup. I'm just going to frame today a little bit our conversation. So we're obviously here to talk macro. So Bitcoin is at an all-time high. Thank you to the conference organisers. Excellent timing. We have so much geopolitical uncertainty. You have Ukraine, you have Israel, you have nuclear aspects to Iran at the moment. So risk analysts are definitely seeing a couple of volatile 2 years. You've got concerns around inflation. Not all economists agree, obviously, but there are certainly concerns around inflation in society. You've got interest rates coming down, or forecasted to be. And of course, regulation is becoming a bit more clearer. You've got the ETF in January of this year, which has huge capital inflows coming in every single day. And you have the US president-elect talking about making the US a crypto capital of the planet. Not only that, legislation going, or a bill in legislation as for having Bitcoin as a reserve asset. And you have countries that are already doing it, like Bhutan, reaching $1 billion in their treasury reserves. Pretty remarkable when you consider their GDP is only 3.2 billion a year. So there are so many big factors going on. I think our panelists are going to help us put some focus on it, see what the impacts might be. So I think it's going to be a really good session today. So I'll just ask you each to introduce yourself for a couple of minutes, and then there will be time for questions at the end as well. So please make sure that you kind of have your brain going, and we'll definitely have an opportunity to ask some questions.
Cool. All right, my name's Jason Pizzino. I've been investing for 18 years, trading for about 14 odd years, and I guess really deep into the crypto market since 2017, but then also been on YouTube now with the financial space for about 6 years. And so that's helped me, I guess, get a bit of an insight into the cycle itself. And I think with a lot of the stuff we talk about today, I'll be looking at or referencing like a real estate and economic cycle, which, at least for myself, has helped me put into perspective all of the macro, what are we talking, events that have been going on in the world, and helped us, when I say us, I say Michael and myself, because we trade and invest together. It's helped us identify better times to buy and better times to sell in light of all of the geopolitical unrest. So I know we might have quite a few members here, subscribers. Thank you very much for all joining us, and everyone else, thank you for joining us too today.
Yep, my name's Michael Pizzino, Jason's brother. I've been active in the markets for about 18 years and come from a trading background, and also in the real estate space, investing. So pre-crypto, the skills that I've learned from trading and investing have been transferable into the crypto space when it comes to following macro trends, more so from a technical standpoint and also a cyclical standpoint. So the good thing about crypto is it's another asset class which has repeatable patterns and repeatable cycles. And like Jason was touching on before, we've been able to use those skills from the traditional space and transfer them into crypto. So we are in a big macro uptrend. It's been going gangbusters, and I think we have a lot of the elements together now which are really lining up to push crypto even further higher, especially now that we're in all-time high territory. So on that, I think we're going to have some good discussions about what's going on in the space. But in terms of my background, trading, technical analysis, cyclical, and yeah, I'll leave it at that.
Hi everyone, my name's Simon. I look after the SMSF strategy at CoinStash. I started my trading career. Actually, I call myself more of an investor. I started investing in a lot of mining, exploration stocks, given my background working in that industry, and then moved towards crypto. And I've been in crypto since 2013, and I think I'll provide more of a investor mindset as opposed to a trading mindset or perspective. Yep, that's me.
Thank you so much. We've already touched upon just how much is going on. How to focus? What would you consider the key macroeconomic factors to look at?
The key macroeconomic factors?
Yeah, or indicators, I should say.
Indicators, yeah, factors, indicators. We do have Q&A after this, and I know the way Michael and I look at the market is the opposite to what you hear from the media. It's the opposite to what you hear from newspapers. It's almost the opposite to what you hear from basically every other analyst online. So when we've talked about this before, it often raises eyebrows as to how this could actually be possible. So I had to preface that with what I'm going to say, because I don't necessarily look at any of the macroeconomic factors. I follow a land cycle and an economic cycle, and at least from what I've seen over the last 18 years, it has kept me on the right side of the market for longer than it's kept me on the wrong side. So in order to make profits from the market, real estate and so on, that's definitely been like my crystal ball. With that, from what I've studied with it, it's over 200 years of history. And so the way I like to look at the market for my own investing is to try to avoid the noise of the media, the news, the macroeconomic factors, if you will, just anything like that. Because when the cycle is up, prices are going up, no matter what's going on. And so this does start to raise some eyebrows. No matter who won the election in the US, my view is the market was going to go up. Trump, Harris, it didn't matter. It was going to go up until it doesn't. The same thing happened with the previous election and the election before that. We're in an uptrend and we'll remain in an uptrend until we get to this peak. And then we go into a significant collapse. And I think the next collapse is going to be the larger one.
When you're talking about price as your indicator there, you're just looking at the price of Bitcoin or what?
Sorry?
Or real estate, or what are you looking at?
Yeah, so real estate and the economy. And unless those two are doing well, I don't think we would have a significant bull market for Bitcoin and cryptos. They're high-risk assets. People, you can correct me if I'm wrong here, guys, but I think we're only really going to get into those when things are looking good out there, or at least we feel a little bit better than what we did at the lows. So
in terms of macroeconomic indicators, for us, it comes back to the land market. And the land market's been solid for about 13 years now. So we've had a few small corrections. This is talking about basically all around the world, developed countries. We've seen only slight corrections when it comes to real estate, be it a few percent back in 2022, 5 to 10%, depending where you are. But since the land market has remained so strong, and it's the largest asset in the world, any problem that's popped up when it comes to geopolitical issues or global pandemic, they've only been isolated issues and it hasn't affected the economy. So in terms of the most important indicator, the land market's the most important indicator. When we start to see problems in the land space and we start to see cracks in the economy to do with over leverage, too much debt.
So what would be an outward sign of this inconsistency in the land market? Like, if you were just a person reading the news at home, what would make you think, oh, that's kind of interesting, I'm going to keep an eye on that?
If you start to see issues in banks or other sectors that have to do with falling land prices, that's going to be a major red flag. If you see falling land prices and the economy starts coming down, stock markets are unlikely to do well, crypto is unlikely to do well, because we're seeing the largest asset have a significant drawdown. So
defaulting on mortgages, if that goes up, you're like, oh, that's something going on.
You can follow mortgages, follow sales, follow days on the market. I'm not sure. I guess most people here are probably from Sydney. You can still see rising real estate prices. Properties aren't staying on the market very long. So obviously we're at the Australian Crypto Convention, but understanding the largest asset is the most important thing, because that's what underpins the economy.
Now, Simon, give us the contrast.
Yeah, so I look at it maybe slightly differently. I see macro as setting the conditions for people to invest. I don't take the view that macro means like if interest rate goes down, therefore I buy Bitcoin. There's actually a big of a huge jump between that logic there. So what I like to look at is who's going to be buying crypto, where's that money going to be coming from, and obviously one of the things which influences that is interest rates. So as interest goes down, what does it mean for retail investors? Potentially means mortgage rates, interest come down, so they're more disposable income, and therefore they might buy an ETF or they might buy Bitcoin. So that's retail money. It's more discretionary. It's really depending on do they have the money, disposable income to do so. For institutions, I do think political events, geopolitical and domestic and international political events do have an impact on Bitcoin price, mainly because Bitcoin has this narrative of it being a hedge against geopolitics. The narrative has grown over time. It used to be peer-to-peer cash. Didn't really influence. It wasn't really. I mean, in that situation, macro.
Can you explain
probably
a bit
doesn't matter so
about
much.
why there's narrative that Bitcoin is a hedge against geopolitical uncertainty?
I don't have a personal view on it. I think that's
Just
the narrative
why there's
that,
a narrative.
that
What the
BlackRock
narrative
has
is.
been pushing. They say it's not a risk-on asset. It's not a risk-off asset either. So what is it? It's actually just a hedge against uncertainty in the world. And because crypto and Bitcoin in particular, they're momentum assets. If more people buy, the more the price goes up, the more other people want to buy. So if you want to express a view on geopolitical uncertainty, then you do it through Bitcoin. You used to do it through gold, but gold, there's this other narrative going on that Bitcoin is the new gold. So yeah, I take the view that macro conditions do set the conditions, but because crypto is still a very nascent asset class, I looked at where the money is going to be coming from, and generally for nascent asset classes, you can even if macro conditions are bad or deteriorate, because the new money comes in, it could still lift up the asset class for many reasons. So as you can tell, I'm a bull. I think there's many ways in which the market can keep doing well, and whether regardless of macro, it's good or bad.
Very interesting, thank you. It's quite interesting at the moment as well. Countries are increasing their asset allocation and their treasury reserves to gold. I think it increased from about 6 to 11% over the recent years, which is pretty large percentage increase. I'm interested. We have so much development in technology and AI, and there's so much narrative there. Are you guys utilizing technology to help supplement your understanding of what's going on?
For me, I keep it pretty simple. I follow charts and price trends. So if the number's going up, I want to be in that asset class. And if there's reasons to believe that, not even reasons to believe, if there's signs of buyers leaving the space or macro support zones breaking down, the price chart doesn't lie. You can have all the reasons in the world why something might be bullish, but if the price is falling, really that's the most important thing at the end of the day. So in terms of technology, I try and keep it really simple. We can follow the price chart, we can follow volume analysis, we can see if people are actually active in crypto, Bitcoin, whatever asset it is. And if the trends start to turn around, then it's just my signal to get out. And you can do that on any time frame. So for now, all-time highs is the most bullish place we could possibly be. And I was saying this earlier, but if you think about what that means, people are buying now because they believe it's going to be worth more tomorrow. They're not buying on today's price. So when we're in all-time highs, absolutely everybody thinks it's going to be worth more tomorrow. So it's incredibly bullish. So all we need to do as investors is to try and forget about whatever narratives there are and just follow the trends and make money. If you're here to make money, that's one thing. If you're here to believe in the next big thing, then that's another story. But as traders and investors, we're in this to basically better our lives, better our families' lives, and just keep riding those trends. So in terms of technology, I keep it super simple. Laptop and internet connection.
Yeah. So what was the question? Do you use technology?
Are you utilizing technology in your understanding of asset classes and how you should respond to events, and are you using it at all?
Personally, I don't.
No algorithmic trading?
I do think at a micro level, it can be a tactical strategy to take advantage of any basis or arbitrage. But yeah, from a technology point of view, no, not really. I think AI could potentially summarize a lot of data globally and then present some trends, but no.
I think there's a bit of room there or opportunity there for big data. I think there's a lot going on in the economic space that you kind of grab a lot of data even from, say, restaurants or something. One thing I think everyone kind of wants in this room is a bit of alpha. So what's your undervalued kind of narrative this cycle?
That's a good question. Undervalued narrative? We're kind of at all-time highs, so I don't know if there are any significant narratives that haven't really been uncovered yet. And I think they're all going to go through different cycles of which one's popping up next. You know, it's meme, if we're talking crypto, obviously here at Crypto Convention, meme coins. Everyone knows about meme coins, but the search trend for it is still high. So I think it's important not to underestimate how much further trends can go. You know, everyone's sort of acting with a monkey brain where it's like, well, meme coin's already done. What's next? Oh, AI, what's next? And they keep looking for this what's next. And rather than just sort of focus on one area that still has a trend going on, you know, they lose attention and go somewhere else. And I remember doing that in 2017. You know, there was a lot of ICOs, and that was all it was back then. But it was going from something that had utility, and then it was like, this thing's an ETH killer. That was like 2017. And then after that, it was back to something else. So everyone was just looking for the next narrative, as opposed to just focusing on one area and using the energy and the attention that they've got to one area. And when you think about it, that's essentially what bull markets are designed to do. It's just to grab your attention. Keep picking attention, keep picking attention. And you miss it, and you miss it, and you miss it, and you're like, why didn't I get it? I was on that before. So I don't know if there's anything that's not, hasn't been uncovered yet. There could be, but if you already know about something and you're good at it, I would just stick with it.
Just as well, we're going to do questions after everyone answers, so keep it processing in your brain, and I'll come over and we'll ask our excellent panelists.
In terms of narratives, I think having Trump come into presidency and the team that is building him around him, I think that's kind of the perfect narrative, because it's a recipe for people to believe that this time it's different. And in terms of the markets and the cycle and bullishness, I think it's incredibly bullish, because there will be a lot of people who believe it will be different and this bull market's going to continue indefinitely. So that's a narrative I'm certainly following, and I think it's a very bullish place to be.
I've had the benefit of listening to you guys. I had time to think. I've got two. First one is a fun one, and that is obviously meme coins. That's the narrative around that is you've got Bitcoin as the headline asset class, but then you've got infrastructure tokens and everything in between. That's a bit hard to understand. But the rise of things like GameStop, the crowd investing basically, where you follow the trends, social investing, that meme coins could potentially be a class that not only retail gets into, but institutional investors. And you can see that happening with Elon and Doge and whatnot. So that is a trend, a narrative to watch. That coins, crypto tokens are very difficult to understand. What should I buy? Bitcoin, and something that relates to me personally. The second narrative, which is probably a bit more boring, is where is the money going to be coming from to send Bitcoin to higher highs? And you look at where that money is going to come from. I see trends in financial advisors, accountants, TradFi industry looking at, should I allocate 2% or even 3% to Bitcoin, not as a risk-on or a risk-off asset, but something just to hedge against some uncertainty in the world, whether that be a war or whatnot. And that trend, that narrative isn't really being spoken about enough. It is happening behind the scenes. Financial advisors are having these conversations with their clients, even with their investment committees. And obviously, what that means is, perhaps Bitcoin has more ways to go. And if you're interested in getting exposure to Bitcoin in other ways, other than investing it through yourself personally, through a company, trust, or a self-managed super fund, whatever, speak to a financial advisor if you want to, yeah, it's definitely, it's no longer just individuals. Companies trust SMSFs. I think it's an area to watch.
If I were to be a bit cheeky, could you give me a percentage on the likelihood of US having Bitcoin as a reserve asset? Of
Zero?
that going through, of the bill?
Close to zero?
Close to zero. But the narrative could be amazing.
Follow the narrative. That's
Yeah.
where the money's made, not in whether it happens or not.
I wouldn't say it's zero, but I think, no, betting on that, the risk of that is lowish, but the reward is so high. So you look at your risk-adjusted return. Like if they manage to get Bitcoin into the treasury, whether that's taking some of the funds from Silk Road that they already hold in custody, but then maybe not necessarily buying on the market, but you know, doing a OTC transfer between different departments, that itself could be them having some Bitcoin exposure. But yeah, I'd say it's low, but the reward is so high that I agree with the guys, it's worth betting on.
Yeah, if there's enough of a story behind it, then you just got to keep going with the story until it doesn't exist anymore.
Risk to reward is always the underlying equation there. All right, is there any audience questions? You're so quick, I'm coming down.
So I have here a picture of Michelle Bullock, the Reserve Bank Governor from Australia, and she said this week that crypto's not money. And what was your response, or what were your thoughts around that?
So it was the Reserve Governor of Australia said crypto's not money. I think she's right, but which cryptos? Like, is Bitcoin money? Some will say yes, some will say no. Is it gold? Is it... I mean, I just use it to trade, and if it catches on, great. But then she also said there's no place for it in the Australian economy. So, yeah, I mean, I agree, but I don't know if that really matters to what my goal is, and my goal is trading and making money from it. So, like, we're Australian, but we don't mean almost anything on the world stage. Yeah. When it comes to crypto, I guess, yeah.
Money is what we use on a day-to-day basis to live our life. And at the moment, it's Australian dollars. So in terms of where it currently sits, it's not money, but you can turn it into money and use it as money. So I mean, it's going to be different for everyone, but when you're cashing back out into Australian dollars, that's what matters at the end of the day until you can actually use something else everywhere else.
Yeah, I agree. Money's meant to be spent. It's meant to be exchanged for value, and I don't think Bitcoin needs that. Some stable coins potentially are a use case, but Australia has a very good payment system compared to the rest of the world. We have NBP, we have AusCo, so I kind of see where she's coming from. At the same time, the fact that she's even considering it is a milestone in itself, or even talking about it is a milestone in itself.
I absolutely love that question. We've got another one over here as well.
Hi, like if you look at online, there's like a lot of different narratives in terms of like how high Bitcoin can go. You got some people calling for like 120K, and then some people calling for a super cycle, which can potentially go up to like 200,000 or something. Like, how much juice do you actually think there's left in the market?
So is the question,
like,
sorry.
Yeah, considering of like the US dollar being super high, and it's obviously making Bitcoin really expensive.
So is the question, will Bitcoin, like what, a price target for Bitcoin? Do you see it at a low price or a really, really, really high price?
Yeah.
So on the one extreme, we've got like Arthur Hayes saying 750, Kathy Wood saying 1.5, Michael Saylor is off with the fairies. Like those sort of targets, or are we talking like more conservative? I mean, you need both in a market. We always need those people who are just like extreme visionaries. Saylor talking about what did he say? 40 million in 30 years? I don't know what it was. Something crazy. But you need that extreme, and you also need the other extreme, then it ends up somewhere in the middle. And I would say probably closer to the more conservative end. Look, I'm looking between like 120 and 200, but if it goes to 300, it wouldn't really surprise me either. But at the end of the day, we just keep following that chart on a longer term basis. And when you see key levels get broken within some sort of sentiment, then that's a signal to say you're probably coming towards the end of the move, regardless of what the narrative is at the moment. And maybe it does go to 30 million in 30 years, I don't know. But it depends. Do you want to hold it for that period, or are you trying to make something in the next 12, 24 months? So yeah, I'm more on the conservative end, but I can change because I follow my rules in the chart.
There's no limits to the greed, and when a market goes over the top, it can just keep going and going and going. You can see it in meme coins, you can see it in commodity cycles, you can see it in GameStop. I'm not saying that's what's going to be happening to Bitcoin, but when the trend is up and the price is rising, you've got to remove a price target from your head, because there's no limits to how high something can go when everyone's pricing in future gains. So I guess that's a long way of saying I don't have a price target, and I don't think there's really much. I don't think it serves much purpose having a price target, because if it gets there and the trend keeps going, you know, just got to keep riding those trends. It sounds very overly simplistic, but that's just the way I look at the market.
Yeah, the Bitcoin's in price discovery at the moment. It could go to 1 million, it could top out 110, and no one really knows in the short term. So, yeah.
I always love a good price question. We have one over here as well.
Hey guys, this question's in relation to the 18-year real estate cycle model. So I've seen that being used to explain the cycles of both the US stock market, like the S&P 500, but then also the Australian real estate market cycle. So is it then that that model can be used to explain two seemingly disparate markets that are actually in sync? Or is it that maybe the model's being misused and it's not actually relevant for the US stock market? What are your thoughts?
So is the last part of the question, is the 18-year cycle related to the stock market or the real estate market?
Yeah, because I've seen it being used as an explanation to model the US S&P.
So the data from the 18-year cycle, and sorry if you don't know about the cycle that we're referencing, just to answer the question though, the data is from the US real estate market to get to that. So that's why it's used for the real estate and the economy in the US. Australia tends to follow. We lag a little bit, generally speaking. But in terms of the stock market, generally it's gone slightly higher. It goes on a little longer than when real estate peaks. The reason for that is the land values are plateauing, sometimes coming down, but you've still got other sectors in the US economy that are ramping up, or not ramping up, that are still going up towards the end of the cycle, which keeps that, like the equity market, S&P 500, going that little bit longer than where real estate usually peaks.
Okay, yeah, I think you just answered my follow-up question, was the relationship between the US real estate market and the Australian real estate market, because they seem like they would be disparate and not really linked together. But if I heard you correctly, you're saying, okay, US real estate market, then followed by the equities US market, and then followed by the Australian real estate market, roughly.
I think so. I think that's what we were, yep. If I got the question and the answer right, yeah. Yep.
Okay, cool, thanks.
You're welcome.
Thank you. Any questions over here? One in the back.
Hi, what are your thoughts on the real world asset narrative?
The real world asset narrative?
Real estate tokenization.
It doesn't seem like it, at the moment anyway, it doesn't seem like it's catching fire as much as meme coins or AI. So I'm not writing it off. I'm just looking at where people's attention is going. And like in previous cycles, logically speaking, stuff that makes sense should have value and should go up. But we didn't see that with ICOs. We didn't see it last cycle with like gaming and metaverse. And then this cycle, it's meme coins. Like, none of this stuff has any real value. It's literally just people gambling. And now we don't even try and hide it. So we're not even trying to hide that. So in terms of real world assets, like logically speaking, I think it should have something. Maybe it sticks around longer term. But in terms of what am I trading and investing in now, more of my portfolio would be with narratives that are catching fire, like meme coins and I guess AI. But yeah, there could be something to it. It's one of the ones that has been popping up a little. Yeah.
What I find really interesting about real-world assets is, I think stablecoins are a great use case or a great proof of concept. Or it's probably the proven that real-world assets on the blockchain are probably stablecoins. I think there's a lot of innovation happening in that area. What real-world assets will potentially do is bring more assets, real-world assets, onto the chain where people can do stuff with it, whether collateralize it and then borrow money to invest in other things. I think it's an interesting space.
But would you invest in it now?
Would I invest in it now?
Knowing meme coins, AI, all the other narratives. There's your answer. No.
Yeah.
No, stable coins is a good use, but obviously we all know we can use stable coins.
I think one thing to be careful of, or something I always consider, is when people who are building real world, bringing things on chain, is where does the value actually accrue to? People who are bridging the link, bridging real world assets and on chain, usually there's a company or equity structure behind it. And what is their exit? Do they want to sell the company, so therefore the token's really, well, what is the token for? Or are they driving value to the token itself? So that's something I like to look at. And because there's equity behind it, like you have a startup, you want to bring real estate on chain, there's value to that equity, the shares that you hold. So there's this constant tension between, do I drive value to the equity or do I value to the token? And that really depended on the regime, like the regulatory regime. In Australia, launching tokens is hard, so therefore the value really goes to the shareholders as opposed to token holders.
I'm loving the banter. It's good, back and forth. We've got a question over here as well.
Hey, how you going, guys? This is more to Jason, because you were talking before about the crash that's coming, so we're sort of looking at 26, 27. What are you expecting to see from about 26, 27 when the market crashes? And then moving forward, say the next 4 or 5 years, are you expecting a similar cycle, an uptrend, or are you expecting a longer downturn?
So the question's basically, when the crash comes, what to expect next?
Yeah, are we expecting to see the pattern repeat again, the 4-year cycles, or are we expecting something that's going to last, so that it's going to stay down a lot longer?
I think the next downturn we have is going to be longer than most people expect. Investors, generally speaking, have a fairly short-term time horizon, and you can see that when you look at any data online. It will show you the 3-month performance, 6-month performance, 12, and it usually only goes up to around 5 years. But when we're looking at longer time frames, I think when we start to see problems this time around and the market starts to reverse and we head into a bear market, most people are going to be thinking back to COVID or 2022 and quite a fast recovery. But in those time periods, the land market was still very solid, so we actually bounced away from those lows quite quickly. Whereas when we see the next downturn, we're anticipating it's going to be land-driven and it's going to be problems in the real estate space. And as that affects basically every person on planet Earth, the downturns are more likely going to be longer lasting, as it's going to take longer to recover from. So 4 or so years is a general kind of time frame we watch.
What are the factors you're considering when you think that there's going to be a land kind of valuation crash?
I think one of the main things to watch is access to credit. At the moment, it's very easy to get a loan, relatively speaking. We have government stepping in to provide support for people to get into the housing market by the way of stamp duty concessions. Employment is still quite high. Most people have a job. Wages are going up. Interest rates are coming down. So we have all the recipe there to help people come into the land market, and we're still seeing credit being created. So when the credit tap turns off, that's going to cause a real problem for assets, because we're not going to have that extra money coming back into the system. And that's where all asset classes are kind of tied together in that sense. So when credit dries up, it's going to be a little bit more difficult for other assets.
Well, what about the government printing money? Because that's all we hear about. They turn the money printers back on, it's all going to be good again.
Simon, can you give us a counter narrative there? Do you think there's a crash coming?
I think the ETF has changed the landscape. If you look at the SPX 500 over the last 30, 40 years, it's been trending up. And I think that's because of institutional allocators just putting money in. I mean, there's outside of stocks, there's property, there's real estate, and now there's crypto, Bitcoin. So, whereas before, like the last cycle, we didn't have that institutional money. And with Bitcoin and options being launched, it reduces so options reduce the volatility of the asset class, so it makes it easier for investors, institutional investors, to consider it. Because as an institutional investor, the thing that you dislike the most is portfolio drawdown. You want to minimize as much drawdown as possible, so losses in your portfolio, but still maintain the asset upside. So in crypto, it's very hard to construct a portfolio where you say, I want a maximum 10% loss in my portfolio at any time during the year, realized or unrealized, but I want a 20 or 15% compounding growth. That's very hard in crypto because of volatility. But the option, Bitcoin, IBIT options, do allow that because options compress the volatility of the asset class, and therefore it makes it easier for institutional investors to get in. And with money printing and that kind of stuff, it does unlock the institutional money.
Something I've been thinking of.
I was going to say, I don't want to talk for you, but when you say crypto, should you separate Bitcoin from crypto?
Yeah, sorry, I meant Bitcoin in that context, yeah.
Something I've been thinking a bit about is a lot of countries around the world, they don't have their own fiat currency, right? They rely on the US dollar, or there is a big black market for transacting in US dollars. So when you talk about BlackRock condoning Bitcoin as an alternative money, how do you think that I think we've been quite focused here on Australia and maybe the US and things like that. But what about around the rest of the world? What do you think is kind of going on there? Are there any big narratives? We've had a lot of countries default on their sovereign debt in the past 5 years, I think about 15. So any thoughts around that and what that could mean for the crypto industry?
So you say like, if other countries start to take Bitcoin on as their reserve currency? Or
not necessarily countries, but more from the citizens. So you have so many millions of people that can't have trust in their government or trust in their government's currency. So do you think that there will be a narrative kind of play out there that we've not seen so much in the mainstream?
I mean, I think there could be a narrative that plays out. There can be a narrative with anything. If the narratives play out, the problem that we usually face at the peaks is that we think the narrative isn't priced in yet. But if the narrative's been going for enough time, whenever the top comes, and it doesn't matter how much you believe this narrative should keep the price going, you're going to see a top. So it could extend the market further than what we all think it will be. But eventually, if you get a bigger move up, like a blow off top, you're going to see it come down. I don't think there's going to be like a super cycle that holds the price up there because of these narratives of other countries using the Bitcoin as the reserve currency, because us as investors have bet on that's going to be the case tomorrow when it comes to bull markets.
Yeah, I was going to say that I think there is a place for crypto, and most countries are trying to figure out or for Bitcoin rather, what that place is. So trading Bitcoin is one thing, and where it actually falls into the whole ecosystem of an asset class, it's still being worked out, and I don't think anyone really knows. So it does come down to a question of what's your objective in this space. Are you a Bitcoin believer that it's going to be adopted by all different countries, or are you try to ride the price trends? It's a different question for everyone.
I like what you touched upon there, which is the expectation and price setting. So if it's already priced in, it's kind of hard to gauge that sometimes. So do we have any more questions? I think we have time for one more.
Hi, I'm a subscriber to both of you. Simon, I'd love to ask you more about options, because I've been looking quite actively. I've got a lot of money sitting in Bitcoin, Solana, Suri, and I'm worried. I've been through a few cycles, and I don't like having it all sitting in these stocks or these cryptos that could go down. So I've been looking at taking options instead, because it gives me leverage with minimal downside and exponential upside. But I don't know which platforms are good for that, especially being in Australia. Have you done much options, or have you guys, Jason and Michael, have you done any options trading?
Not options on crypto, no.
But even MicroStrategy and NVIDIA, as a backup.
Yeah. options are quite exotic and quite complex, and I forgot where the quotes come from, but the exact wording of the quote, but basically there's this saying that someone made a lot of money, lost the money buying options, but made their broker rich, something along those lines, because options are a great way to make something sound really good, but not hide some of the downside. But anyway, your question is, where do I get access? How do you get access to options? I don't know the answer to that. I mean,
would you be saying like you're just adding a layer of complexity to your investment plan at times in the market where you might want to reduce that stress? Trying to look at options and other things that you may not have used before? I think that kind of goes with everything. That's why I look at mine.
Watching you guys, you're amazing technical analysts, right? You guys are sitting in front of the markets, you're trading probably every day. I can't trade every day, and I've got all this exposure. Whereas I could minimize some of my exposure by having long-term call options, for instance, on Bitcoin, or MicroStrategy might be safer, because I don't know about crypto options a bit more. I had a lot of options on FTX, for instance. That
goes over my level of understanding, and I'm happy to say that. Like when I don't know it, I don't know it.
That's a challenge I've been finding is
I would take profits, take cash, and I simplify my own portfolio. Yeah.
So you guys are more just don't have so much sitting in the long-term holes.
If I want to, if I think the top's coming or I want to take some profits, I'll take those profits into USDT, into fiat, and if I've got, with my other strategy, maybe into some real estate. That's it.
I mean, there are venues that you can use to buy and sell options. I have to be careful what I say because I don't want to endorse them. But one typical way to hedge, if you have a lot of Bitcoin, a good way to hedge against that exposure, if you have an idea of time frame, is to buy a put option, for example. So price goes down, price goes down, you lose on your Bitcoin, but you make money on your put option. But it's quite complex, and I don't like to talk about it because it is quite.
I want to thank the panelists because we came at you from all angles today. So thank you so much. I did want to end though. 3 words to describe 2025 market. 3 words only.
3 words.
3 words. Only 3 words. 2025.
It's up only.
Oh, is it? Up only, guys.
I'll go 1. Macro bullish. 2 words.
Woo! You heard it here first. It's very bullish.
All-time highs.
Thank you again.
That could be a sell signal.